Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka. It was a good day of trade given the fact that we hit a fresh record high of 22,600 mark for the first time ever. However, we did cool off from the day's high. In fact, at one point in time, we were below that 22,500 mark, but we managed to end above that crucial level for the first time. So it was a record closing high for the Nifty as well. If you look at the broader end of the markets, the midcap index also hit a fresh high today, but cooled off and just about managed to end the day in the positive territory. Small cap index also ended the day in the green. The India VIX continues to cool. It cooled off further by 1% or thereabouts, below that 11.5 mark now, and the NSE advanced decline ratio is nearly at 2:1. So the breadth was also fairly positive, tilted firmly in favor of gainers, and sectorally IT and banks rather were among the top sectoral gainers. Of course, rate sensitives were in focus given the fact that we will have the RBI policy tomorrow, and banks have been upbeat. Of course, a lot has to do with HDFC Bank because that was among the top Nifty gainers today. But PSU banks that saw a good run yesterday were in the red today. Other sectors that didn't do all that well were FMCG as well as oil and gas names, because of course government has hiked the windfall tax on crude production. So that's why stocks like ONGC were under pressure. FMCG, of course, as we know, has been underperforming for quite some time, and today as well we saw underperformance coming in from the FMCG pack as well. So among the Nifty gainers, you had the likes of HDFC Bank. Couple of updates there. Business update was strong, and the foreign headroom in the counter has increased, which could lead to higher weightage on the MSCI index, which is why the stock was the top Nifty gainer today. UPL, CNBC TV 18 exclusive, that the company is looking to list its seeds business, to launch the IPO of its seeds business sometime in early FY25. Reacting to that, UPL was up in excess of 3%. Aside of that, Eicher Motors, Tech Mahindra, Titan, these were some of the other gainers. Among the losers, as I mentioned, ONGC, Adani Ports, BPCL, SBI, Airtel and Grasim. These were some of the losers on the Nifty 50. If you look at the broader end of the market, some of the movers and shakers there were on the gaining end. You had LG Equipments, Alkyl Amines, Aster DM, Balaji Amines. So some of these specialty chemical stocks doing well today. And on the flip side, you had the likes of Capri Global, that was the top loser on the Nifty 500 index. Angel One, on the back of the fourth quarter business update, was among the laggers, and so was Dabur. The company, in fact, the stock tanked on the back of lower revenue growth in Q4, and Ajanta Pharma was the other one that didn't do all that well. But on that note, let's also take a look at some of the stocks that are on my radar this afternoon. Starting with HDFC Bank, among the top Nifty gainers today, of course, there have been concerns about deposit growth, margin growth, and which is why the stock has been underperforming. But today, of course, good news in terms of deposit growth as well, and the news that foreign holding room has increased in the counter also sent the stock rallying in trade. Foreign holding room has risen to 24.95% as per the latest shareholding data. Foreign investors have reduced their stake in HDFC Bank by 4.5% to 47.8% in the March quarter. Now, FII holding now stands at 55.54% vis-a-vis the requirement of 55.5%. Now, that implies a miss of somewhere around 5 basis points. Now, this is likely to increase HDFC Bank's weightage on the MSCI index, and analysts are anticipating inflows to the tune of $2 billion into the stock as a result of higher weightage on the MSCI index. Now, currently HDFC Bank has a 4.36% stake in the MSCI index. So that could go up because of the higher room for foreign holding in the counter. Aside of that, good news in terms of the fourth quarter update as well. Deposits have grown 7.5% on a quarter-on-quarter basis. Remember, sluggish deposits and compression in margins were some of the concerns in the quarter gone by, and now with this Q4 update, that has allayed some fears. And the CASA, if you look at that has increased 8.7% on a YOY basis, and the ratio, the CASA ratio, stands at 38.2% vis-a-vis 37.74% on a quarter-on-quarter basis. Look at the retail deposits that have grown 27.8% on a YOY basis, and advances on the other hand have increased in excess of 1.5% on a quarter-on-quarter basis. Now, if you look at the domestic retail advances, that's also up somewhere around 3.7% on a quarter-on-quarter basis. Stock among the top Nifty gainers today. I think that is something that propelled the Nifty Bank index higher as well. So, all in all, a good day for HDFC Bank and in turn the Nifty Bank Index as well. On the other hand, I have Avenue Supermarts. That's the other stock on my list. It jumped to a 52-week high on the back of strong business update in the fourth quarter. The Q4 standalone revenue has grown somewhere around 20% on a YOY basis. In fact, the company's revenue growth was propelled by a 7% increase in revenue per store and a robust 13% YOY increase in store additions. Total number of store additions, by the way, right now, at the end of March, stood at somewhere around 365. Now, the company has demonstrated consistent growth trajectory over the last 3 financial years. In fact, if you look at what Morgan Stanley has to say about DMart, it has an overweight rating, target price of 4,695 per share. Now, it has noted that standalone Q4 revenue is nearly 20% growth that the company has said is nearly 1% higher than what the brokerage was expecting. In fact, top line growth, according to the brokerage, was led by implied same store sales growth of 11%, which is the highest in the last 5 quarters. And on a 5-year basis as well, the CAGR, the compounded annual growth rate, that improved to 19.7% vis-a-vis 19.4% in the third quarter. Now, growth is still lower than the average of 20.4% in the first quarter. Remember, CLSA has recently upgraded the stock as well. In fact, the target price on the stock as well to 5,514 rupees per share versus 5,307 rupees. Now, quarterly store additions, according to CLSA, are at an all-time high. In fact, CLSA also pointed out that the growth prospects of the company are quite promising in the markets that are largely untapped. But interesting point that Motilal Oswal has made is that in the last 3 quarters, the revenue per square foot remained subdued due to addition of larger store sizes and weak discretionary spending. But this trend has been gradually reversing in the last 3 to 4 quarters, and that is evidenced by the narrowing gap between the revenue per store and the revenue per square foot growth. So that's an interesting point to note. If you look at the stock performance, the stock has given 20% returns over the last 1 month, and over the last 1 year as well, it has yielded returns of somewhere around 20% or thereabouts. The other pocket that will be in focus is the entire IT pack. It has been in focus all of the week because we have had brokerage reports coming in on the IT pack ahead of the numbers. Remember, next week on the 12th of April, TCS will be reporting its numbers, and subsequently all the other IT giants will be reporting their quarterly numbers. Now, if you look at what CLSA had to say was that the fourth quarter is expected to be soft, but that is largely baked in by the street. And even JP Morgan has pointed out that there is no perceptible demand improvement in the fourth quarter, and even in the first quarter of FY25, that's likely to be the scenario. Muted demand is likely to result in poor Q4 exit rates as well for the IT majors, and it could also deflate FY25 guidance across companies. Now, they've also maintained that markets should actually ignore a soft fourth quarter because that's largely, as I mentioned, that's been baked in by the street any which ways. Now, JP Morgan, in fact, Morgan Stanley, I beg your pardon, has upgraded some of the mid-cap IT names. Persistent has been upgraded to overweight from neutral. Target price has been raised to 4,400. LTIMindtree, that's also been upgraded to neutral from underweight, target price of 5,200 rupees there. And KPIT Tech has also been upgraded to neutral from underweight with the target price of 1,400 rupees per share. The brokerage has also pointed out that Persistent Systems, L&T Tech, these are some of the key overweights, and of course Infosys as well for this particular brokerage. And if you look at JP Morgan, what it has done on Coforge is it has initiated coverage with a overweight call target price of 7,000 rupees per share. In fact, it expects the company to grow revenues at 13% over FY24 to FY26, and it sees consistent execution in sales as well as operating leverage. Now, a 21% kind of growth over FY24 to FY26 on a CAGR basis places the company 11% ahead of its large cap peers. That's what JP Morgan has pointed out. It has also said that the stock has underperformed both NSE IT as well as mid caps by 11% and 6% on a YTD basis. And according to JP Morgan, the share decline over the past month, which comes to somewhere around 10% or thereabouts after today's up move, is actually has fully baked in the margin dilution. And this, the stock price right now could be an attractive entry point according to JP Morgan. So all in all, the street is bullish on IT, even though the next couple of quarters are expected to be soft and there is no perceptible changes in the demand scenario as such. Well, that's all about the stocks that were on my list today. But of course, we have notched a record close as far as the index is concerned, and we'll have to see whether or not we manage to continue with this momentum tomorrow as well. Given the fact that it's an important day, we have the RBI policy outcome at 10 a.m. And post that, we'll also be getting you, a battery of experts to decode the policy announcements as well. So, big day to watch out for tomorrow, although it is likely to be a no surprises kind of a policy. But let's see what the governor has to say. But with that, completely timed out on this edition of Closing Bell. From me and the entire team, thanks a lot for tuning in. If you have any comments, leave them in the comment section below. And of course, stay tuned to Moneycontrol for all your other news and updates. Have a great evening and come back and join us tomorrow morning at 9 a.m. on Opening Bell.